Righto, buddy miners. Tell you what, a bit of a market darling for the Aussie energy sector, down 20% today. Complete polar opposite to something that is up 20% in my books every day, the credibility of Axis Mining Technology, the trusted advisor. Talk about 20% compounding of trust and just general awesomeness as a drill hole survey instrumentation provider every day. Compound 20% over a year. Holy snap and double
like
shit.
a 1 billion % return.
That'd be just a billion gazillion. Oh, very good. We're going to get into Yancoal. Oh, bloody... So you wouldn't think someone that's got $1.5 billion in cash would bloody go down 20%. But anyway, JD.
What you do with the cash, isn't it?
What you do with it, mate. Don't want another, you don't want Evie Hambro on the friggin', on the investor call ripping your new arsehole about M&A that doesn't make sense.
No,
like the old
you do
Freeport
not.
thing back in the day. He's my new goat.
Your new goat.
He's my new goat I want on. Big Evie.
Big Evie
the
from
big
BlackRock.
fella. He's the man.
We'll get him one day, mate.
Yeah,
Don't worry about
mate.
it.
I'll wait for him to call me. What else we got, team? Gee, is
Mate, you're going to uranium land?
You're going to uranium
Tell
land.
you what, the fucking Athabasca Basin and just Canada is... I can sense it's turning into WA Lithium 2023.
Oh,
There's
jeez.
shit going everywhere. There's shit happening, nothing being mined, just it's all happening.
Deals, flow of funds.
Mate, brokers just putting a bit of food on the table. I love it. Oh, the mania. Mate, GC, what are you? You got a bit of a GC segment.
Yeah, so I know just touching on a few block trades and strategic investments that have happened in the last 3-4 months and sort of what it all means. But before we actually get into...
I was about to say,
Yeah.
you know who's as good as Axis?
Who's that?
Up there? Argent.
Yes.
How
If you
good was
haven't checked
Argent?
out his chat with the boys end of last week, do so. Compulsory listening if you have any interest whatsoever in the energy space and what it all means.
back. Oh, and the fact that Arjun was the ex-boss of the delicacy.
I know. How crazy is that?
Mate, we've had people, message and say that that's their favourite interview that we've done,
Yeah,
Favourite.
mate. Ex-head.
We've
That's
done
pretty-
almost 100, so
ex-top
that's a
dog
lot
at
to say.
Goldman Sachs. What more do you need to know? Talk about credibility. You don't survive there with it if you're shit.
No.
Like, you don't get promoted that high if you're shit. Like, so he's good.
Absolutely.
You're right, JD. Speaking of shit price performance today, Yancoal. I think we've got a ding, ding, ding for Trav. Or
We do.
or after today, it's a ding, ding.
Just gently, mate, gently. All right, so I think it's worth giving a bit of a lay of the land before we get into really why the share price has been smashed. So, like you said, down 20%. We'll talk a bit about the half year results. They do their results on a calendar year basis, and then we'll get into the real crux of the news. But essentially, on a high level, they did 990 million in operating EBITDA, 420 million NPAT. As a reminder, they're about a $7.5 billion company. That's after the big whack today. They finished, this is the big talking point that you referenced, Maddie, with 1.55 billion in cash at the end of the
Wow.
half year. Huge. And they're essentially debt-free. They've got some lease liabilities, but you can think of them as debt-free. They started the year with 1.4 billion in cash, paid out over 400 million in divvies. That was, from the full year results at the back end of last year, as well as another 400 in taxes, again, from last year as well. So
So
on
they're
an
just
operation,
like they're a mining company that's like makes money.
it's a pleasant change, isn't it, Maddie?
Unbelievable, and make heaps of money. Like Jesus Christ.
Yeah. So
Good on
to hone in on that, Maddie, on their margin. So 17 million tons in sales for the half year. Their guidance is 35 to 39. So they're tracking a touch behind, although it's second half weighted. So they should, knock on wood, be fine, barring any weather disruptions or anything like that. But they're also a majority thermal coal producer. So 88% if you're looking at it on a tons basis, 78% if you're looking at it on a revenue basis, obviously with the price differential. And we'll chuck up a chart that sort of changes slightly, but stays within the same sort of bands as you go half year to half year.
Yeah, and looking at the chart, JD, I'll just bringing it bloody up. I'm pretty sure they're, this 20% whack is like back to where they were start of the financial year. It's not like it's been like it's had a good run of recent. Like it's not like it's just been
12-month lows or something like that.
No, it's not been desecrated. It's literally where it was at the end of May. So it's
If you zoom out, Matty, and you look at the bigger picture, they're very much heading in the right direction. They did acquisitions quite a while back. They paid down their debt, became massively net cash, and they distributed heaps to shareholders. But as we'll get into in a bit, that was the expectation.
Yeah, and if you got a northeast trending stock draft that is distributing chunky dividends as well, that's like really northeast.
Super northeast.
Really northeast with a few other catalysts as well, which again we'll touch on near the end of the segment. To round out, Matty, you talk about them being a cash generator. To put that into context for people that haven't followed the company as much, they realised on this half year $176 a tonne. Their cash costs are around about $100 a tonne. You chuck in another $15 for a royalty. You're effectively working on $60 per tonne EBITDA margin. Like I said before, 17 million tonnes. So that gives you over $1 billion right there. But then obviously you got to take into account depreciation, SG&A, CapEx, taxes, all these sorts of things. The guidance on the cost front, again, that was a bit lower than where they were. That's between 89 and 97. But like we always talk about, as the production tonnes go up, the costs will come down. With it being second half weighted, that should see them pull back in line as we come into the back end of the year. So on a cost front, they improved if you look back at the first half of last year. Now, there's something interesting that really stood out. Matty, you'll like this one, mate. They're talking about disruptions from the weather, and they've built in additional infrastructure across their assets so that they don't get whacked around too much by wet weather. That's a lot of rain up in Queensland, also in the Hunter.
Yeah, right. GC, they better be bloody using Greenlands for that water infrastructure.
Yeah, it's pretty obvious, isn't it?
Yeah. Jesus, and this is an example where you got too much water.
You need to put it somewhere.
Yeah. And not you. You might need water. You might want to get rid of the water. You might want to just give the water to someone else.
Move it from here to here.
Oh, sorry. Yeah, I think Greenlands are actually experts in
water transfer, mate.
They're like
is that right?
water connectors. They identify. They're like a bit of an M&A they're like a water broker.
A water broker.
A water broker. They identify who's got fuck all water, identify who's got shitloads of water, and just like the flow of funds, the flow of water. They could connect water from abundant source to a non-abundant source.
That is such a good explanation of Greenland.
It's like a water desk.
A water
They're on the water desk. So I'll tell you what,
Connecting
if you've bloody got rain pissing all over you and you don't know what to do with it and you want to sell it to someone else, get Greenland's equipment to put the bloody infrastructure in and sort out the exchange for you. Look at the bloody website flyover. I'm just bloody dripping wet thinking about it. Just love it. Go Greenlands.
Love it.
Anyway, sorry, JD, button in there.
I thought you might like that one, mate.
Oh,
all right,
mate, I love water.
So why are they down so much, JD? If they've, financially seems like they're doing fantastically. They've made all this cash. They've got all of this cash. Well, what's the Debbie Downer?
This is the real news, right? This is what we're itching to talk about. So at one point 15%, another point 20%, they're getting whacked, billions of dollars off the market cap, and it all centers around them not paying an interim dividend. So I thought the best way to illustrate this one, guys, was just to scroll through some of the tweets that I've seen, because there's no shortage of them at the moment. And for those just on the audio, you're going to have to bear with us for a moment. I'll try to describe a couple of the emotions we're seeing. There's a lot of tears. There's a lot of anger. There's a lot of disappointment and heartbreak.
I love the Real Housewives one. That's great.
You've got some tweets from former guests, Matty Dat with one in there, Matty Water with another one, and there's a bunch of others. If you're thinking about the meme inspiration, I think you got a bit of Breaking Bad, some of The Office, Jamie Vardy.
Oh, so that you said dividend. No, I said divvy end.
So it might be one you have to jump on the YouTube to see.
That's the Manny Dat one. That's from. That's the. What was his name?
It's the Breaking Bad one.
Yeah,
I forget the old fella.
Oh, fucking be Carlos something. No, what was his? No, I've got to think of this. I won't be able to continue the
Matty,
show.
you Google in the background, mate. I'll keep going with
Hector Salamanca. That's it.
That's it.
Hector Salamanca.
Go ahead.
Yes.
Oh, Jesus Christ! So it's like they've gone ex-dividend on the share price without paying a dividend. Effectively,
A little bit.
and some.
Bloody
Yeah. So
hell. Yeah.
I think you get the picture by now. At least if you're watching on the YouTube, the divvy was cornerstone to the Yancoal investment rationale. Heaps of the punters out there, it was just a yield play, and we'll show their dividend history here. And it's worth bearing in mind, since about 2022, the beginning of 22 roughly, they've traded in a $4 to $6 range, and they've got a dividend of 33 cents, 37 cents, 70 cents, 53 cents. They're all semi-annual.
Wow.
And then you've also got another 20 cent, you got another 50 cent quarterly dividend. Now, this is all while they paid back US $3 billion in loan repayments over an 18-month period. And they not only went from that net debt position to becoming massively net cash to the tune of 1.5 billion, as we touched on at the beginning of the show. So all of this is in preparation for M&A. And that M&A comes with a met coal focus. Like I said before, these guys are thermal coal miners. So it's the old Whitehaven coal move, which we spoke a bunch about whenever that was, September, October last year. And if you look in the weeds a bit, there were warnings, not so much on the dividend front, but obviously on the M&A front. If I pull up this comment here from the CEO from the quarterly just 1 month ago, I'll read a couple lines off. A large cash balance and robust margins provides us with capacity to pursue suitable growth opportunities. So again, not crystal clear what they were going to do with the dividends, but they were clearly looking at growth. And talking about M&A, the obvious target is Anglo Coal. I see an article every other day about the Anglo Coal sales process, who's running it, who's interested, all these sorts of things. So we're not breaking any news on that front. The Australian did, however, report that on September 9th is when the sellers are requesting bids. And, you can bet there'll be hot competition again, just like there was for Daunia and Blackwater. A couple of the names to expect are, Glencore, Whitehaven, Stanmore, sort of the gear. You got Burma as well. Obviously, Yancoal throwing their hat in the ring.
Big Clive Palmer, he'd be fucking getting in there, wouldn't he?
Big Clive.
Big Clive.
Mate, if I was Clive, I wouldn't bother earning that much.
Where's Tinkler? Get back in the game. Get Tinkler involved.
Bring back Tinkler, yeah.
I want to see JV between Clive Palmer and Nathan Tinkler. Go Australia.
Just two cracking personalities of Aussie mining, hey?
Oh, I'd love it.
That would be juicy, mate. So
then they bribe the North Queensland Cowboys. I love it. Right, let's what do you think about the market reaction, JD? Justified, bloody overshot. What's going on?
Yeah, I think that's the question to ask, mate. I think the M&A has been pretty fleshed out. We've spoken about it in the past. We don't need to go into too much there, but 20% off is a big old whack, and the first clear read is that these investors do not want growth. That is not what they're there for, and that sort of squares not so well with the fact that most companies want to grow. Like it's in their nature. We see it all the time. We talk about it all the time, and by default, I'd say I'm against M&A. I think in the mining space in particular can be very destructive. So I think that's the kind of default stance I take until kind of proven otherwise. But with that said, in the coal space, looking back at most of the deals we've seen in the past few years, they've been pretty solid deals. You've got either sort of pressured sellers or forced sellers, however you want to kind of put it, with buyers that are paying relatively low multiples and just able to earn that back in a not so long period of time. So it's the same in this kind of case. Assuming Anglo Coal is what we're kind of talking about, you got a pressured seller, a company that's under real strife that sort of, blew themselves up to not get bought out by BHP. And I think this deal will, it would be similarly friendly. You can think of how BHP structured the selling of their assets, maybe not as friendly. BHP is in a much stronger position, and they were able to really, finance the sale process for Whitehaven. But you bear that in mind, and then you take into account, at least on my personal level, I'm bullish met coal. I think Matt Warder illustrated that point in great detail when we had him on the show, so people can go and watch that. We don't need to flesh that out massively. But that just leaves me thinking it's definitely worth exploring. And if I'm in the boardroom there, I'd definitely be encouraging management to have a close look at the deal. You've got a demand side of the picture, which, the demand isn't going away anytime soon for met coal. And then you've got a real shortage of supply, especially sort of quality kind of supply, I'd say in a kind of safe jurisdiction, but I'm not sure we can really call Australia a safe jurisdiction anymore with all the royalties and whatnot that we've seen.
Especially Queensland coal.
Exactly, and we'll get into that a bit more with a couple comments on the earnings later on. So bearing all that in mind, you do get a lot of uncertainty that the M&A brings. It's pretty fair that the yield investors are frustrated. Companies should have a pretty solid gauge of what the owners want. This management team doesn't own a massive amount of shares in the company, although you've got that 62% owner, and then you've got a sort of circa 7% owner in Cinder, and I'm sure they'd be pretty tapped into what management is all about.
I wonder if you got any updates on the whole free float side of things, and if they'll ever get in the ASX 200?
Mate, they are so close. They are, last time I looked, 29.56% free float. The requirement for ASX 200 inclusion, or one of the requirements, is 30%. And we know Cinder, who I just mentioned there, they're the second biggest shareholder. They have been selling, so they are that close. And that would, in my eyes, that can't be too far away, and that would lead to quite a bit of buying. And
what about a bloody that's might be what an acquisition brings if they chew up a cash and do a massive, huge capital raise, and then that would put the free float above 30% easily.
I guess the argument is, like, if they're hoarding that much cash, are they doing that so they don't have to issue equity? But I mean,
depends how big the deal is.
It depends on how big the deal is, and it's just like, well, would you not just use your cash and like debt fund it? Would you raise equity? I don't know. It just sort of depends.
I
on
don't
the cost
think
of
they
capital, right?
I don't think they'd raise equity. I mean, look at what Whitehaven did and how they were able to get that away. You've got 1.5 billion there. I know it was a pretty chunky bite that we're talking about, but I can see them teaming up with the likes of Acidic. That's already been reported. You get a hefty amount of debt. We saw them take on US $3 billion in the past. That gets you a long way there. And then maybe a bit of vendor financing or something like that. I don't think equity dilution is a serious concern here. You never know what's going to happen, but I would be very surprised if they
a bit lower on the pecking order for sure.
Yeah, I mean, that was the big scare around Whitehaven, right? People thought they might they might dilute the shareholders. They didn't end up having to, with BHP helping fund a good bit of the deal and then them stumping up cash and a bit of debt that got them across the line. This would be a bit of a bigger bite. I'm not sure if they're looking at buying perhaps a couple of the assets. That's clearly not what Anglo wanted, but maybe that's something we see. You never know.
Well, how much do you reckon the Anglo met coal assets would go for?
Oh, so from what I'd sort of read, a lot of the brokers had the value a bit over US $3, but then you talk about chucking on a premium, and that they wanted closer to $5, but that was pre the fire we saw at Grosvenor.
Yeah.
So who knows what that kind of chalks off. There's been a bit, commentary on that's been a bit quieter since, but it's a big old bite. But, this is a company that's 7.5 billion Aussie in market cap. Them teaming up with someone could definitely make this doable without any sort of equity dilution.
Almost like a bit of like a BHP Lundin Group approach for Philo, do something similar.
Yeah, I'd imagine the tie-up would be much more in favour of Yancoal. Like, again, I point to Whitehaven, and they're talking about selling 10 to 30%, maybe of just one mine, as opposed to like a 50-50 sort of split. So, that's all the M&A commentary. I think we can talk hours on end on that stuff. But there were a couple other points I wanted to flesh out from the call that I thought were interesting. The first couple, you take them with a grain of salt because this is a coal company talking their book. But I've got on the demand side, they had some interesting comments around the increased thermal coal demand on the back of heaps of electricity demand. I think this is sort of super interesting. We saw it in New South Wales. We saw the Eraring coal-fired plant having its life extended, And you can see the chart that we'll chuck up now with numbers coming out of Woodmac, their forecasts. And that just illustrates, as time has gone by, people have just continued to increase the expectations of when coal demand peaks. And that's just gone higher and higher. The second interesting point is on the supply side. This goes exactly to what we spoke about yesterday. Years of permitting and finance restrictions contributing to accelerated reserve exhaustion. All these assets move up on the cost curve with the added time for permitting, the financing restrictions, the royalties being added in, all these sorts of things. At the end of the day, the existing producers are the winners, as well as the overseas companies and the deposits and projects that sit overseas. And the last comment before I fling over to you guys is one that Respeculator on Twitter pointed me in the direction of, and this relates to just how cooked their Queensland operations are. So you got Yarrabee and Middlemount, and I'll show the chart here, or from the numbers from the results, not the presentation, but if you actually dug into the numbers, and you can see all the earnings came from New South Wales. They lost $43 million on their Queensland assets. So the management tried to talk about this in a kind of different light. They shone the light on our three largest mines being some of the best coal mines in Australia, but you just kind of need to invert the comment and look at the other operations they've got, and maybe that leads to management trying to flog them off if someone would buy them down the track. But yeah, there was plenty more to talk about in the presentation. It was actually really, really interesting. The call's not so interesting here because no brokers cover it. There's not really many interesting questions being asked, but I think we can sort of leave it at that and get into a bit of uranium news, Matty.
I reckon we'll get you on the next call, JD.
Yeah. I think because
just one comment on the M&A thing. It's like there's one doing M&A, but it looks like the M&A they're going to do is going to be very competitive. And statistically, if you are the successful bidder, you usually pay more than everyone else was going to. Statistically. Statistically.
There's a bit of wisdom, mate.
So they might, that would be the fear that they're going to pay a shitload for something.
And overpay for it.
Yeah, definitely a competitive sort of process. But who knows? I mean, there's a good chance they don't even win this. They were the underbidder for Dorney and Blackwater. There's a good chance they don't even win the bidding process here. We're talking in 6 months' time, they've still got all this cash and they just decide to pay it all out.
Big special divvy. Oh, crystal ball stuff. Love it, JD. Good work. Oh, mate, a bit of uranium activity in the bloody Athabasca Basin, all throughout Canada. This reminds me of WA lithium. It just starting to have this feel about it. And I think we've talked about this. So ATHA. I think we talked about them end of last year, start of this year, when they did that three-way merger. So they're at TSXV listed. They're about a Canadian 178 mil market cap. So they did this three-way merger, announced it last year, went through the start of this year. That's when they tied up with that ASX 92 Energy and the CSE listed Latitude Uranium.
Oh, yes.
Yeah, that brought together so 92 Energy had that Gemini discovery, you'd say, some intersections close to surface sort of uranium in the Athabasca Basin. Then Latitude had this 43 million pound resource at Angalac in the Northwest Territories, so just sort of north of Saskatchewan. And then they also had this CMB resource in Labrador, 14 million pounds there. And then ATHA got all this exploration ground and they got some carried interests on exploration blocks held by NextGen and ISO Energy over the other side. And there's some crossovers of personnel. I'll get into it later. But it didn't stop there. Then ATHA in April they agreed to terms with this Inspiration Energy there was an $8 million option agreement for the Ledge and Plateau properties, and so Inspiration would end up with 70% of each of those projects after putting about $4 million of exploration into each. And then in May, ATHA did another 70% job with Riverboat Energy for the Vista project in the southern part of the Athabasca Basin. And so $9 million of exploration going into that one. I'd fucking hate to be writing the annual reports and doing the account, and there's just shit going everywhere here. anyway, all this activity and merging and bloody carrying and yada yada hasn't done too much for the share price. 1 year performance, and I'll show them relative to Paladin, Boss and NextGen for 1 year, down 27%. So you can see it's underperformed relative to those stocks. So now,
Matty, take us to today's deal.
Today's deal. So there was all them deals and today's deal. So it's a bit of a swapsy jobby going on. I think they've thrown the life draft out to this company. So you got ATHA, and there's ASX listed Terra Uranium. So the ATHA CEO, he used to be on the board for Terra Uranium before he joined ATHA. So, and he was also a GO for Cameco for 9 years and VP of operations for NextGen for 5.5 up until 2021. So talk about a bloke that sounds uranium-y. Is that a word? Uranium-y?
Uranium-esque.
Very uranium-esque. So Terra, they're pretty much a $4 million market cap shell company, 318 grand left in the bank at the end of the quarter. So they were out of dough. They were in discussions to acquire this Amer Lake project in Nunavut. That's the Canadian province. That's northeast of Saskatchewan.
Okay.
But it's got shit. It goes forever. It's like
very north,
next to the Northwest Territories. And they had like mineral rights on an adjacent tenement to this Amer Lake, so they're trying to extend the mineral rights for that, and that's contingent on that deal going through. But anyway, today's one is it's a non-binding letter of intent, so essentially good for fuck all at the moment until it's set in stone. So part one is for T92, which is Terra Uranium. Mm-hmm. So they're Passfield Lake ground, which is adjacent to ATHA's Ridge project, which is north of Cigar Lake, so budding tenements. So pretty much if ATHA drill 4 sets of exploration campaigns valued at $1 million each, or if they drill 4,000 metre holes into the geophys target, ATHA can convert that into either a 4% NSR on the project or take a 60% interest in the project, with T92 retaining 40%. So they're like 4 separate options spaced 1 year apart, each option valued at either 1% NSR or 15% of the project. Okay. And then the swapsy job was there's the old ATHA 70% off the shelf arrangement that we've talked about 17 times before for the Spire Horizon tenements. And they're the tenements next to the Gemini project that come with the merger that they did with 92 Energy at the start of the year. So there's bloody...
Mate, I'm just going to say I've completely tuned out. I'm so fucking confused.
Just look at the maps. Just look at this. God. We're taking a bit off here. We're piecing it together with there.
That's like a bloody jigsaw puzzle. Oh my God.
So they've got to spend $2.75 million on exploration for T92 to get a 50% interest, and then another $2 million to go up to 70%. But they have to spend $750 grand by late December this year, even though they'll get some. I think you get a rebate from the Saskatchewan government for exploration activities for geophys or drilling, but 300 odd grand in the bank. So I think
they still need money.
I think the emails were coming out just as I went on for the capital raise coming out for Terra Uranium. So definitely be a 2-trancher, that one, because it's a bloody $4 million company. So overall, I'll surmise it. ATHA have a shitload of uranium and ground in Canada, and they're doing a heap of option agreements with other companies to do exploration on their shitload of ground. So
that's a good summary.
That reminds me of WA Lithium last year. So
just a lot of fingers and a lot of pies.
The brokers are loving life. Nothing will probably ever get mined or for years or decades, but everyone's just chucking a bit of food on the table. Let the mania begin in bloody the uranium in the Athabasca Basin. I'll tell you what, between all of that, all that exploration data, that'd really test out the CPU capacity of those friggin' VRIFY computers trying to
my God.
Imagine processing all that data
VRIFY
through the
models.
AI to do the exploration targets, and Jesus Christ, the bloody water cooling, you'd have to chuck a bit of ice in there, I
Be
reckon.
terabytes worth of stuff. Far out.
Well, it would be because it's Terra Uranium.
I didn't even mean
Stella
that.
GC would have loved that. We had a visit
GC.
from Stella GC today. Anyway, mate, I tell you what, VRIFY, if you want to friggin' start chucking some models around the Athabasca Basin, that'll keep you busy for years.
Oh, jeez.
Imagine the conferences will just be flying. Imagine I want to go to PDAC and I want to go watch the prezos and I just want to see VRIFY. Like, that'd make it worth my while just to see the whole of PDAC verified because it's on steroids compared to anything we see in Australia, JC.
100%.
Oh.
Mate, I think I need a standard VRIFY presentation just to understand all the targets you're talking about
Yeah,
here as well.
literally.
Not to mention the AI.
Imagine the flyover. You'd be bloody, mate, you'd be
You're
like...
flying from one end of the country to the other.
Yeah, mate, you get a bit seasick, I reckon. Yeah, anyway, she's all happening. I can feel a bit of mania coming about. So, go Saskatchewan.
Interesting to see on the U front, Matty. It's been pulled up on all these the recession talks and everything lately. Just had a scan of the old watch list before there, and there's it's been a little while since I've looked, but a lot of the names have been whacked around a bit. Hey,
Coming Friday is Kazatomprom's 2025 sort of outlook. I think that's the one that everyone's been bloody waiting for. So, yeah.
we're doing all-nighter, mate.
Doing an all-nighter. Could be like I've heard one comment, predicting sort of a flat year on year, but interesting to see, like, you look at the short positions of like, Paladin, Boss, Deep Yellow and
They're
all
up
that
there.
sort of continuing to rise. But you would imagine like you'd have to be a pretty, depending on how influential that Kazatomprom announcement is, like holding a short position over the weekend from a Kazatomprom announcement and then
risky.
seeing what's going to happen on market open Monday. So it'd be interesting to see what happens in the U stocks in the lead up to that. If with that short interest, if there's starting to be a bit of short covering, because she should be a bit of a gamble with that side of things. So going to be, but that's you. I think this is. I saw I think it was on old Hooney's one of his webinars. They brought up this chart of, like, I think it was either historical uranium equity or spot price performance or something, like on a relative basis over 20 years, month by month, and you just see it. And there's always this. There was this big, massive gully in August historically over the 20 years because of the northern hemisphere summer. So, she's definitely been bloody. Oh, mate, there's still the love on Twitter. Everyone's
All your U mates.
all the U mates. They haven't given up faith.
Ebbs and flows, mate. Ebbs and flows.
Yeah, so no, we'll be watching out. We'll be watching out for that and reporting accordingly. I think from what I have heard is everyone was like, right, how the fuck are they bloody maintaining or lifting guidance to where they dropped it to when like Inkai reported lower, and they're like, and based on all this historical low of sulfuric acid issues. But I have heard like the Budanovskoy, the new one, because it wasn't stopped and restarted because of COVID, because it is a new one. I think that's been a bit easier to get up and going because it's like it's a fresh well rather than, and as we've said, like stopping a well then trying to restart it can be a bit problematic. So I think that with that coming on, yeah, interesting. Can't wait. Love it. Go nuclear.
Very good.
Ali, talk to us about some...
do we need a break after that? Jesus Christ. Fucking got a bit dizzy. Whew. It's all go. Rip in, GC.
Oh, geez. So just to close off today, register shake-ups. So there's been a noticeable amount of block trades, sell down, strategic investments in the old inverted quotation marks, and register shake-ups the last few months, particularly in the gold space. So I thought I'd actually dig into it a little bit and say sort of what's been happening in the last few months. And before we go into this segment, we'll get all the ding-ding-dings out the way. So a ding-ding-ding for Spartan for JD, and then a ding-ding-ding for Genesis, Degrade, Develop and MinRes for myself. So
I think this is my problem. I don't think I have any ding-ding-dings. There's my issue.
There's your issue. Why is this the case? I think the trend we've seen with a lot of these deals that have happened in the last few months is people who have been very long-term holders or perhaps aren't natural holders of that particular stock, either taking profits or providing someone else with a very valuable M&A stake as a potential corporate suitor. So some super recent examples, we saw Perseus take a strategic stake into Predictive, RCF disposed a bit of their Genesis stake. Red 5 did their big block trade the other week.
To themselves.
Yeah. That was probably the only one that didn't apply to the rationale we talked about before. Catalyst, that's had actually a bit of a movement in their register. So Gina had a sort of a long-term stake in Catalyst for a while, and they block traded that out to board of management and insto investors in April. And then more recently, the other day, St. Barbara sold their remaining stake for 25 mil as well. Unsure of who the buyers were on that one. Spartan's another example that's had a bit of a register shake-up since its old Gascoigne days. I mean, NRW which was the contractor, they did a big sell down of their remaining stake for $33 million back when Spartan did at the same time as Spartan did their capital raising back in April. Tembo took some off the table back in June. Around the same time, Ramelius picked up a huge stake in Spartan, largely through that Deutsche Balaton stake.
Yep.
Fortescue's another one, probably not on the not so positive side. Capital Group sold off $1.1 billion a couple months ago. And there was another almost $2 billion block trade just last month as well.
I was looking at the biggest
also Capital Group.
Yeah. I was looking you search the biggest assets under management in the world, BlackRock up the top, but I think that Capital Group wasn't far behind. Like they are freaking huge.
Right.
Yeah, I think when I looked, it was 2.3 trillion. I think that's the number that comes to mind.
I think BlackRock, are they 6 trillion or 9 trillion?
They're in the
trillions
somewhere.
It's 6 or 9 trillion. It's fucking.
I think they cracked 10. Yeah.
Yeah, I think maybe I looked at 9. They're freaking huge. Go ahead,
interesting,
bro.
Interesting. Also on the Fortescue front, there, Ali, you mentioned. Seen a few comments on the sell side as well as the buy side of people turning bullish now that FMG have got whacked, way more than their sort of kind of peer group, if you like, the likes of BHP and Rio Tinto. There was an article in the Fin about this. I saw JP Morgan, Citi, they all upgraded their outlooks. That's on the equity research side, as well as Elliston talking up, saying they've flicked out their BHP holding for an FMG holding.
What else we got, GC?
Actually, one we touched on earlier, the Yancoal Cinder sort of sold down a bit.
Was that the 60% holder, the big dog?
The second one.
Oh, right, yeah.
Yeah, so that was a couple months ago. AMCI, they actually cleared out a couple of their holdings, one in Jupiter Mines and one in Red Hill a couple of months ago. Orion did a big sell down in Adriatic in May. That was when Adriatic was in the 4s.
Yep.
So that was pretty well timed by them. MinRes getting rid of their Develop stake.
Yep.
There's another one. And then there's a few others as well. Worley Actually, that was quite a big one. A Dubai infrastructure group, Sadara, $1.4 billion block trade there. Gina getting into Linus, and then Capstone Copper, basically Orion. Again, they did a sell down, but shunting that stock from the TSX to ASX to create some more liquidity on this exchange here. So I guess, look, that's the list I came up with. There's probably heaps ones. More that I've missed out on.
Alkane getting into Medallion.
Alkane.
The future of Ravensthorpe.
There you go. They're the new substantial holder. So I guess, what do you guys think about the increased level in this type of corporate activity as opposed to traditional M&A?
Well, it looks like a lot of them are really trying to pick. There's a lot that have picked the top and cashed in. Like, the Yancoal one, like they've obviously, whether they had an indication that there was no dividend going to be paid, because they've obviously cashed out at a much better spot than it is today.
Yeah.
And, like a lot of the bloody, and we've seen with, a lot of everything's pulled back a bit this bloody last few months, but there's a bit from both, isn't there? There's a lot. There's a Supreme Pizza going on here.
Supreme Pizza.
When's Gina's next big play? Something to be.
She's due.
She's been quiet.
She's due.
The Wailu Gina, they've been quiet.
I mean, to answer your question, Ali, I'm not sure if it's more heightened than normal or not. I'm trying to think of what the actual sort of standard rate is, but
I don't think we've ever written them down. That's why. Like, once you actually collate them, it's like, I wonder if it is actually more than usual or not, or it's you've done such a good job of collating that, GC.
It certainly looks like more strategic selling than buying. Just looking, obviously, there's always someone else on the transaction side, and we don't always know who's on the other side, but it looks a lot of like those, strategic seller with multiple, financial buyers on the other side, as opposed to more strategic buyers coming in and swooping up stakes. I think a lot of people might have seen that, things got a bit carried away when we had base metals prices really kick for a couple of months there, and they just sort of picked it and kind of sold out a few positions. A couple of them also speak to, funding dynamics. That MinRes one, I think they were freeing up a bit of cash there. I think you could kind of say the same for other reasons, but it's kind of interesting.
I think a lot of it, if you go through a lot of them, they've all been pretty long-term ones that got in there early and probably chips off the table, like, Tembo, Deutsche Bellaton with Spartan, obviously, like
Orion, Adriatic.
RCF did the original deal alongside Aussie Super for the whole Genesis Gwalia side of did they come in when Rao? No, that was for the Gwalia deal, wasn't it? That was for the Gwalia deal, the Leonora deal. Then
both Orion ones were, funding to notch up the company from one stage to the next kind of level. Adriatic as well as Capstone,
and FMG, like, iron ore price friggin' absolutely ripping, and FMG at all time highs, and prediction of, worries about the China housing market and everything. So probably just thinking, right, take the money now.
Yeah, just take the profits.
Might come back in later, a bit cheaper.
Yeah. How about any potential block trade ideas you've got, Ali? I know you've been thinking of a few.
We love a bit of speculation.
Oh, nice,
I've got one of your ideas in here too.
That is the best. I like it.
So the first one, which is pretty obvious one, is Gold Road's 17.3% stake in De Grey. That's now worth well over 500 million Australian dollars, and it's about a quarter of Gold Road's market cap. And, we all know that Gold Road aren't an operator themselves. Goldfields operate the Gruyere asset that they've got a 50-50 JV on. So they don't really make sense as a potential suitor for De Grey. Gold Road had about 86 million cash at 30 June. So, could they use that as an opportunity to unlock, $500 million to do some sort of a deal, outside of Gruyere or something like that? Or, the other example, which has been, circulated numerous times, is, someone buying Gold Road to get access to de grey itself.
Yeah. God, if there's any time this whole Regis Gold Road thing was going to happen, it'd be now. You'd think on the back of the...
Yesterday's
even
news.
though, as I said, even though McPhillamys was probably on ice anyway, it's really on ice now after the government's decision.
Actually, I'll let you take the next one, Maddie, seeing as it was your idea.
I reckon I know where it might go.
Tell us.
Just one quick one before you jump in with that next, Maddie. I'd imagine Gold Road have a bit of a tax bill, so it's probably not 500 flow. You know, if they want to use that to do another deal, they'll have to pay a bit of capital gains on that one.
The magnetic, the Dale Alcock 11% stake worth about $45.
Oh, look, the reason I put that in there, sort of, as you pointed out last week, Maddie, when we did a bit of a deep dive on magnetic, I'm not sure that 45 million is, neither here nor there for a big WA property developer, but it might be another one of those cases of Dale taking the profits and offering up a potential strategic stake for a suitor that's active in the Leonora-Laverton region. But I think that's got probably a bit more water to go under the bridge, that prospect. But I think that stake, if anyone was going to take a corporate action, that would be the one I'd be picking if I had my banker hat on to sort of get a good chunky stake there to start.
As we said about magnetic, like it's not like it's just popped up either. Like that's the funniest thing about the whole rising gold price environment. Like it's been around for friggin' ages, but once the gold price gets high, it's like, right, what's around? What can people take? And it just started getting all this attention and it's getting talked about, but it hasn't changed.
No, exactly.
Really. So
the other one I'd like to put forward is St. Barbara. So after all the bloody dealings that they've had and, since the company sort of changed a fair bit since they divested their Leonora assets to Genesis, they actually had quite a sizable investment portfolio, which was almost $45-50 million prior to them selling their Catalyst stake the other day. What they do, I will flash up a table here. This is the remaining investment portfolio that they've got at the moment between Brightstar, Petronas Resources. Petronas was previously Kin Mining when they merged with PNX Metals, and also Peel Mining as well. So with Brightstar, I understand most of those shares, if not all, are sort of escrowed for a period of time. So I don't think we'll see any action on that anytime soon. But again, I don't feel now that St. Barbara is out of the region, they don't make sense to sort of be a natural holder of the stock anymore.
Who is St. Barbara now?
Yeah, I know. It's just changed.
They might just keep selling shares and just keep themselves
make money
going
that
for a
way.
bit. Fucking weird.
So I don't know. I think I could probably see someone like a Lion Selection or Collins Street who are already in Brightstar maybe pick up a bit of that, or someone similar to that in the institutional investor space. Or, could you see a Genesis or a Red who are in the region, take up that stake? So I think that's one probably to watch.
Genesis are already on the register because they converted a bit of
their processing fees. Yeah, so that could be a potential. Petronas and Peel, they don't sort of make sense to me as far as a holding for St. Barbara. So I imagine they'll probably get offloaded at some stage, but it's not as probably straightforward for them as they're not as liquid of stock, and that no immediately obvious buyers of those stakes sort of come to mind for me. So we'll see what happens with those ones. And the last one I had is Newmont's stake in Antipa. So they've got an 8.6% stake in Antipa. Given what's happening with Newmont putting Telfer and its Javier on stake up for sale, I'm not sure what Newmont are going to do with their Antipa equity interest in the long run, although I do note they did exercise their top-up rights back in July, but I'm just not sure what's going to happen with that long term if they're looking to get out of that region. But it may mean that, once they do sort of go through the process with Telfer and Javier on, that incoming buyer or buyers, might, take on that Newmont stake in Antipa, perhaps.
Didn't Newmont just pick it up recently? the 8.6% or part of it?
They've had
added
it,
to
but they exercise like a top-up right to maintain it
yeah.
in the recent raise.
Yeah.
Yeah. So not sure what's going to happen there, but I think long story short is I don't think it's going to stay in Newmont's hands, and probably whoever comes into that region would be the most likely buy there.
Fuck that. That's a fucking good segment, GC.
Oh, thanks, mate. This
Bloody
is
good.
my... Everything else was so fucking depressing the last few days. So I thought just a bit of speculation never hurts. So
You know who wasn't depressed today?
Who's that?
Stella GC.
Oh, she met Maddie for the first time,
Stella
JD,
GC,
and she's just
mother
like,
of Ali GC.
we're walking out to get a banh mi as well, which she also loved, by the way. And she's like, it's Maddie. It's Maddie. She was just freaking out. She was so starstruck, bless her.
Oh, she's like a little pocket rocket. Oh, she's a bloody legend. Absolute legend. First
Maddie, you're
ever
just making everyone's day.
First ever banh mi for Stella GC.
She said, "Is like, this is amazing.
Oh,
this is
I
amazing."
told her roast pork, chili, and make sure you tell Q you want a GC banh mi.
GC banh mi.
It's stock standard. Right, any others that on the, I might have a scan through the old watch list. Any other block trades you reckon, JD?
Or anyone making sort of a, like a Ramelius or Percy style strategic investment, sort of keeping their options open until they sort of, things get figured out, I guess.
Let me have a look.
It's been a while since we've seen Big Chris do something like this. He was pretty active in doing these sorts of deals.
Yeah, they're in
End
it.
of last year.
They've got much bigger fish to fry.
Yeah, so... but it's exciting when he was doing it. I wish he was still
maybe to your point, Ali, they could be sellers. That wouldn't surprise
could be
me.
on the other side of the coin.
They'd be taking, big write-downs on the majority of their positions, but they need cash.
That's going to be a very interesting earnings call, isn't it?
Only ones, I'm just thinking Bellevue while they're low, if someone might look for, if they do have a bit of further future pain, but a lot of their major chunks are with the big dogs, like with BlackRock and obviously with all the big funds like Van Eck and Scotia, I think. Maybe, but yes, I don't know if I don't know if anything had happened there, if they'd be able to do a big chunk. Orabanda with Hawke's Point. Hawke's Point have got a big chunk, unless if they'd unload a bit to anyone at these high prices. I think Orabanda was 50 cents today.
Wow. Yeah, no, that's a good one.
So, and then look at the bloody share price of Liontown at the moment. I think they're in the 70s. I think they're back in the 80s.
79.
80s today.
Wow.
And you think of, you're just seeing what happened with Latin, and you're thinking, right, if that's anything to go by, will Gina bloody pick that up while it's low? Don't know. It's just one of them things that goes quiet and you wonder when something like that's going to happen. It's usually when you don't expect it, but that's in terms of the counter-cyclical moves. But they got obviously a big job ahead of them with the ramp up and everything at the depressed prices. So yeah, got me eye on that.
Minres need cash, and they've got that stake in Wildcat. There's someone. I mean,
there,
most other lithium players are hurting as well. But who's hurting the most? Who could take that off their hands?
But then it's like to acquire. To get that stake when they did, and all these lithium stakes they got, to then start flogging them off
so soon after
at the actual ultimate low, like just for survival. It's like, fuck, that'd be just.
Only do it because you have to.
Yeah, you do it because you have to. Because that's there. Don't know. We'll wait and see.
There's a bit of speculation.
I love
for your Tuesday.
The only thing that you don't have to speculate about is how good Axis Mining Technology is.
Segue.
No doubt about it.
No speculation. That is just northeast, good dividend yield. Just you know what you're getting.
Up and to the right, hey?
CSL. I don't think they give a dividend, but Berkshire Hathaway.
I love that.
Yeah,
Very
Axis
good.
Mining Technology. Also got MMS VRIFY, SMEC Power Technology, DSI Underground, Silverstone, CRE Insurance, Greenland's Equipment, the water brokers. Love it. K-Drill, get a spark chart up here as well.
Hoodoo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.